This is Rick Rule for the Vancouver Natural Resources Investment Symposium 2021 Virtual Edition. I'm delighted today to welcome a man that has been known to me and has benefited my portfolio for 2 decades, Mr. David Garofalo. David, thank you, first of all, for subjecting yourself to this interview and for your support of the conference. I appreciate it.
It's my pleasure. Thanks for having me on, Rick.
Pardon me. I'd like to begin this discussion with an overview of the gold business and the gold investment opportunity from your point of view. With your career in mining, you could have chosen any commodity, and frankly, with your career in finance, you could have gone out of resources altogether had you chosen to. Tell me something about why gold, and tell me something about why gold in the next couple of years.
Sure. Actually, I've spent equal amounts of time in both the base and precious space. I've been in the business for over 30 years, 15 years on the copper side, 15 years on the gold side. And I think this is an absolutely fortuitous time for gold because of the amount of quantitative easing that's been introduced into the market on a global basis, really since the credit crisis a dozen years ago. And I would say that's unprecedented in its nature. I mean, if we went back to the previous cyclical high for gold back in 1981, at $850 an ounce, that would be the equivalent to about $3,000 an ounce in today's dollars. But I would say the amount of monetary expansion far exceeds what we saw in the hyperinflationary economy of the 70s and early 80s.
Interesting circumstance and mirrors my point of view, which is, of course, why I agree with it. David, as you point out, you've been in the business now for 3 decades, and you have assembled, I think, an impressive team around you. Your own resume, I think, is ideally suited to the task at hand of assembling a royalty package in the gold business. But these businesses are all about people. Tell me something about the team that you've been able to assemble here.
Sure. I mean, the board management collectively has over 250 years of mine operating experience. And I think that's an important distinction because there's been a proliferation of royalty companies that have come into the space over the last couple of years to fill a need. I think there's going to be a lot of development and exploration that needs to occur in the industry. And I think that royalty companies are an important part of the ecosystem. But many of those companies are frankly run by financial engineers who've never built anything other than a spreadsheet. And so what we've assembled within our operating team and our management team and our board team is a collection of individuals that have mine operating experience, have built mining companies. I've been on the operating side for over 30 years and I've been responsible for the operation and development of many, many mines over my career. Ian Telfer is the chair of our advisory board. Of course, he was the founder of Goldcorp, Wheaton River, Wheaton Precious Metals. He's been a company builder his entire career. Alan Hare, who's also on our board, was my successor at Hud Bay as CEO, 35 years as a prolific mine builder and operator, a metallurgical engineer by training. Warren Gilman, who runs the Queens Road Capital out of Hong Kong. Again, been in the business for over 30 years, and I've known him for that long. Amir Adnani, who's a company builder in both the uranium space and the gold space. So it's quite a collection of people that have really operated and built mines. And I think more importantly, our parent company, Gold Mining, is now being run by a very capable developer and operator. And that's Alistair Still. Alistair worked with me at Goldcorp. He was a senior operations manager with our Timmins business. Then he went to build Cerro Negro in Argentina, so he's a project builder as well, and then ran our corporate development function in our Canadian business subsequent to that. So he brings a broad array of experience. He's a geologist by training. So again, what we've really assembled is a strong technical team that have done this, that have actually operated mines over many, many decades.
Tell me something about the existing assets in Gold Royalty. I understand it's a growth story, but let's talk about the base that you're going to grow from. Tell me something about what you have available to exploit now.
Yeah, so Gold Royalty, for everybody's edification, was spun out of a company called Gold Mining, a public company. And gold mining is a collection of a dozen development stage gold assets across the Americas that collectively has 26 million ounces of gold resource, or over 31 million ounces on a gold equivalent basis. Just pause and think about that for a minute. There are many mid-tier operating companies that don't have reserve and resource profiles of that significance. And what we did is we wrote royalties on each of those development stage assets and then spun it out into a separate royalty vehicle called Gold Royalty Corp, which we IPO'd back in March. And on that basis, we raised over $90 million US. And now we have a full treasury, no debt on the balance sheet. We're well capitalized to start to diversify our portfolio beyond the mineral endowment we inherited from gold mining and the spin out.
And can you take the time to give us some highlights about some of the individual resources rather than the collective resources so people can understand something about some of the individual constituent assets?
Well, there are three principal assets that Alistair is actually focusing on this year to deliver PEAs on. Most recently, he put out a resource on São Jorge in Brazil, and São Jorge is undergoing a PEA study. He pit constrained the resource for the first time. That actually increased the grade of the resource, and that will form the basis of the PEA, which will be published later this year. And there are a number of other assets that he's actually formulating plans on. What's interesting about gold mining is Amir did an excellent job of assembling these assets and inventorying them over the last decade. He bought them at the bottom of the cycle, paid effectively 10 cents on the dollar for them, but there really wasn't any significant work or capital put into them. Alistair's been brought in with his project and operating expertise to pivot gold mining to more of a development footing. In other words, putting capital into them, advancing them, de-risking them, and re-rating them. Collectively, those assets traded about $5 an ounce within gold mining's portfolio on the Toronto Stock Exchange and the NYSE. That's a significant discount to most development stage assets in the space right now, particularly when you consider that the industry is starved of development projects. Reserves are down 40% since their peak 7 years ago as for the industry. So these projects are going to get re-rated as Alistair de-risks them, advances them, stage gates them through the various feasibility studies. And by extension, Gold Royalty will realize a re-rate on its royalty portfolio in each of these development stage assets as Alistair systematically de-risks them and advances them to an economic decision.
So, David, we know something about the business that you're in, gold. We know something about the team that you have in place. And now we know something about the constituent assets, in particular, of course, the $90 million in cash. Now comes the fun part. How do you use this talent? How do you use this cash? How do you use this asset base to grow the company competitively against some of your very, very, very smart counterparties in the royalty and streaming business? What's your competitive advantage?
Yeah, there are many of them, Rick, and it's a good point. I think the advantage we have with the collection of individuals we have on the board management with collectively over 250 years of experience is access. We understand that to enter into processes that are quite often run for royalty sales, it'll be very difficult to get value, to get the double-digit rates of return that we expect when we allocate capital. So by and large, we try to avoid those processes. By leveraging the context that we have inherent in our board management, we're trying to get into bilateral processes before the market's even aware those royalties are available in the marketplace. And that way, we'll be able to achieve our stringent economic criteria of getting at least double-digit rates of return on any dollars we allocate to royalties. And we can get those royalties through a variety of means. We can talk to prospectors and generate royalties at a relatively early stage. And these prospectors may be looking for ways to crystallize value on their exploration success. We can do it through the sale of non-core royalty assets within the portfolios of operating companies. And if we can do that on a bilateral basis and avoid the stampeding herd in a competitive process, then we'll do that. The other means that we can look at growing the royalty business is through transformative M&A. And as I said earlier on, there's been this proliferation of royalty companies that have come into the space over the last couple of years. And frankly, there are too many of them. They're too small to be relevant to many institutional investors. And as generalist capital starts to enter into the gold space, in order to achieve that relevance and track that generalist capital, you need to have scale. You need to have liquidity. And so we intend to be a consolidator in the space. We're looking for royalty opportunities, royalty M&A opportunities to grow our business very, very quickly. So we'll look at individual royalty opportunities, but we'll also look at M&A and to transform the company more quickly as well.
This is fascinating. The interview is going a place I didn't understand that it might go. In terms of this M&A, I get the idea of a roll-up. I get the idea of a consolidation in the royalty space. Would you consider, given the skill sets in your team and your history from Gold Royalty, would you consider buying an asset, encumbering it with a royalty, and then spinning it out into the market in some fashion, allowing other people to take it forward? Or is there a possibility that assets, rather than being downstreamed from Gold Mining Inc. to Gold Royalties could be upstream from Gold Royalties to Gold Mining Inc. Are those sorts of
Well,
things possibilities?
Well, we don't want to get into the development business. I think that muddies the water
Right.
insofar as pure play royalties are concerned. But if we can help at the very early generative stage by putting capital into something on the exploration side, and then you're right, selling that asset off, but maintaining the royalty, then we'll do that. But we never want to be in a position where we're taking on development risk. The appeal of royalty vehicles is you don't have that operating and development cost risk. You're not exposed to that. You're mitigated from that simply because you're taking top line exposure. So we just certainly don't want to muddy that, because if anything, that encumbers the royalty company's uh, ability to re-rate. That tends to depress the multiple, increase the cost of capital, and make us uncompetitive. So we'll always be a royalty company, a pure play royalty company. And I think also importantly, will be a pure play precious metal royalty company, because a lot of the royalty companies that have come into the space in the last couple of years claim they have cash flow, but they're not cash flow from existing gold and silver royalties or cash flow from other exotic metals. They have development stage assets on the gold side, but they really don't have cash flow from gold. So we're going to stay focused on the precious metal side, which I think is an important part of attracting that superior multiple and lowering your cost of capital and maintain that competitive advantage.
David, earlier in your career, you had to suffer through dozens of interviews from investors like me. Tell me what it is that you think that I forgot to ask that my attendees ought to know about gold royalties.
Well, look, I'd say the important thing is the expertise that we brought into the board and management, and I am reiterating that. But beyond Alistair, beyond Ian Telfer, beyond Warren Gilman, and Amir Adnani and Alan Hare, I've been able to attract a very, very capable former investment banker who's been in the business for over 30 years, John Griffith, as my chief development officer. John ran Merrill Lynch's North American mining practice before joining us. So we're able to attract some top talent there. And there's a transactional element to our business. I talked about our technical expertise in depth, but clearly this is a transactionally oriented business. You're out there scouting for royalty opportunities, looking at M&A opportunities to consolidate and roll up other royalty companies. And you need that kind of expertise in-house. And John comes from a South African mining family, but he's a very, very capable banker. So brings that expertise to the board management, which we're clearly going to need as we grow and diversify our business beyond the mineral endowment we inherited from gold mining.
Well, David, thank you, first of all, for your sponsorship of the Vancouver Natural Resources Investment Symposium. Thank you, too, for the leadership that you're bringing to Gold Royalties, Inc. Hundreds of Sprott clients are now shareholders of yours, and we have literally millions of reasons to wish you every possible success. Thank you again.